A lot of questions recently on how to trade earnings season, guys. We are in earnings season. Everybody wants to know, okay, what do you do? What does that mean? It means that some of the best opportunities come 4 times a year, 4 quarters in the year, 4 earnings seasons in the year. A lot of volatility, a lot of movement, guys. We have to, as intraday traders, be able to take advantage. Here comes a few strategies to look at.
Yeah. I think, and look, obviously we're in a bit of a pullback in the market, so I'm going to lead with something that might not seem intuitive, but sometimes there's an opportunity for you to sell when you get a monster bounce to the upside. And again, always consider where the stock has come from. I'm going to lead with that because what I want to talk about is AMD. By all accounts, fantastic earnings report, but going into earnings, the stock, how many times has AMD gone 30% in 3 sessions? I mean, I'm trying to think about it. I don't know if we can actually say that this has ever happened before, but that's what we were looking at going into that report. So what I'm talking about here is an overextension or a big extension to earnings in either direction, and then thinking about where it is that you can try to make some kind of a pullback. And that's essentially what happened here when you got that gap. Is look where you'd come from in AMD. You're trading off of that high, and it gapped up to 130. That's that 30% that we're talking about. And then look at how absolutely clean the reversal is. This is pre-market action. It makes a high at about 132 and then comes right back in, tests a low in the pre-market, and then breaks it at 930. That sets you up with the gap fill of all gap fills, which overnight was essentially $13. It's gigantic moves here. And your risk is about a couple of bucks worth of risk. So what you're looking for is something that is extended into earnings in one way or another, then puts a further gap in that, in this case, actually almost doubled that move, and then you want to look for that risk to reward move. The same thing can happen in the other direction, but the key here is you want something that has moved heavily. In this earnings season and kind of in 2022 here, we're going to see a heck of a lot more volatility, right? We're in an environment where rates are going to be going back up this year. That changes things. A lot of people are not used to trading around that. Well, volatility is going to be here to stay, and you want to make sure that you're trading in earnings, not just saying, okay, they beat. Hey, they beat a top and bottom, and they got it better. That's the trifecta. Just go along. It's not going to be that simple this year. Sometimes you're going to have to say, no, that came way too far. I got to fade it.
Yeah, exactly. I'm going to use something very, very similar, except for that's not the fade play. And this is basically looking for weakness in other stocks to pick up names that you like, right? And I'm going to use an example here for Microsoft. So today, it's quite clear. I mean, Microsoft's down 2.8%. 2.87%, the NASDAQ down 3%, right? So what the NASDAQ is getting hit on today is Facebook. Facebook's down, as you guys know, and we can call it up right now. Facebook's down here 26%, obviously starting the NASDAQ tumble here. The NASDAQ chart doesn't look like this, but very similar. When Facebook reported, bang, goes down, goes NASDAQ. So we'll go over to a name that we like. Microsoft, again, a good report off the bottom. They reported down here, 276. The very next day, we trade 300. We get as high as 310. And then we just, after that, again, some dip downs here into some levels, 296, 298. And then it was just march up again. And then here yesterday, right? This is yesterday, we made some highs, 314, 315. So you're like, hey, I missed Microsoft, right? I missed it. Unfortunately, we wanted to get long near 300, but it's already away at 315. So take advantage today. If you're thinking that, hey, you know what, I've read over the Facebook report, them and Microsoft, very different businesses. They don't have much in line at all. So Microsoft today getting dragged down here by Facebook. So for me, you look for key levels, and I'm going to say like right into here, like if you can get 301, even 300 flat, you know? Like yesterday, you might have been like, oh, I'd love to take 300 flat in Microsoft. So maybe today you get that opportunity, or the next couple days as we sort out some of these big hitters, right? Facebook misses. It'll probably trade down the next 2 or 3 days, regardless of what happens, and it may drag down a name like Softy or Brendan. How about a name like Google here today? You're getting this down 2%. It was up. Look at this report. You want to talk about a good report? You can't even find one negative thing about Google other than the fact that their cloud's not making money, but we know that. So boom, all the way to the upside yesterday. You're like, uh-oh, we missed it. We missed Google. But then, of course, out comes Facebook today. today, bringing this name back down. People now questioning ad spend and so on and so forth. So now you can say, hey, Google v. Microsoft, I'm getting an opportunity to buy down a name that I liked before and missed. So that's sort of my tip here. How do we trade earnings season? If the name you're looking at has influenced the market, move over to better names that you feel, and maybe you get an opportunity to buy them at a discount.
Whether you are looking for increased volatility on an intraday basis, or I love that, as Sean was saying, trying to find opportunities in stocks you want to pick up anyways, based off of maybe weakness coming from somewhere else. Earnings season gives you all kinds of opportunities, guys. We just have to be prepared.